what to do when your strategy stops working. It's a very common situation among traders. They feel like their strategy is no longer working, or that it never really worked and that it needs to be replaced, that this just doesn't work anymore. Maybe it worked back in the day, but it doesn't work now. Let's swap it out. So, what should you do as a trader? Let's go through a few points here to define whether the strategy really isn't working or if the problem might actually be somewhere else. First of all, it's important for the trader to pause. Don't panic. Pause. Take a break. Say to yourself, okay, I have some feelings about this, some outcomes, or something must have driven me to start thinking about this, and maybe even to start looking for a different strategy. So it's good to pause, to tell yourself, okay, stop. And now let's go through some of the steps that a person should take. In any case, don't panic. That means no panicking and thinking, oh my God, this is the end of the world. And I don't know what else. I have to quickly make up for it with something else, maybe something riskier and so on. Yeah, emotions just don't belong in trading, or maybe they do, but we can't let ourselves be controlled by them. Right, that panic. Let's set panic aside. Not every drawdown necessarily means that the strategy itself has stopped working. That means drawdowns happen, but sometimes it's just a matter of timing or the current period and so on. It's important, like we have a series of take profits. There can also be a series of stop losses. And you just need to know your own strategy to know when it's still okay. For example, if I have 6 stop losses in a row, that's unpleasant for me. But I know that this is just that it's normal, and it doesn't mean I'm necessarily doing anything dramatically wrong. And simply, I can get 6 stop losses in a row. I'm not saying it's very common, but it's not unusual either. Yeah, over the years I've experienced it many times. And we often talk about the fact that they're a part of trading. We have to accept losses because they're simply there. We need to approach it a bit analytically, not emotionally. That means really evaluating it over a longer period of time. Take those trades, just take, 30, 50 trades or even 100 trades. Just take that sample as it is and then evaluate the percentage from that. Don't react emotionally to the last few days or the most recent trades that happened. It's good to pause and do that other kind of work in trading. That means doing a bit of the office work, back testing it, evaluating it, finding the differences and so on. You definitely need to check when you start going through these trades whether you're following your entries. That means, are you really doing exactly what you're supposed to do? Or is there some slight deviation from your trading plan? Because as soon as you deviate, even in a small or seemingly insignificant way, it can, over time, systematically deepen and reinforce that development, That means you really need to go back to your plan, go back to your back test, and check whether your trades are truly according to your plan, or if you are actually making some kind of mistake somewhere. Or it doesn't have to be a mistake, but it could just be something different. When doing the recap, it's important to find some kind of pattern. That means find out, even if you go back over, maybe those 100 trades. Look at what really worked, what you consider to be a good trade. Sure, that worked out beautifully. Absolutely great. And try to find the common denominator there. In other words, why do I like it so much? Why do I think that it should work again, and so on? And how does this trade differ from the ones you've had recently, or from those that you consider to be failures? It's also good to evaluate And I think you'll find a lot of things where it differs. Suddenly here, it's a clear trade. Absolutely, absolutely. You know, it must have been beautiful. And with this one, something just doesn't quite work. And try to name these things and try to eliminate them. That means even write down what not to do. You have to weed out a bit from those 100 trades, the ones you make outside of the plan. And let's not pretend that you do everything strictly according to the plan. Yeah, you simply need to cross out a little, eliminate the things that are outside the plan. So basically, I have a plan, and that plan should have some statistics, some analytics. It should have a certain success rate. So the things that are outside the plan don't belong in this category, and you need to completely exclude them or put them somewhere else, and you can evaluate them there. That means all the trades I made outside the plan, how did they actually turn out? Right. And again, you should work with that in some way, but it shouldn't get mixed up with with your standard statistics, your strategies statistics. It's good because the market really does evolve a little bit, you know. Currency pairs, volatility changes, and a lot of things change in the markets. And it's definitely also about season. So season yes, another season no, or one season better, another season worse. So it's good to find out, to do a kind of retrospective backtest to see if anything has really changed dramatically. Even if these are gradual or slow changes, it's important to check whether something systematic, something significant has really changed in the markets to the point that the strategy would no longer work. And for that, you use a backtest again. Once more, you can take data from a year ago or 2 years ago and try out your plan that you've already created. Try once again to go back and do a year or two retrospectively. I understand it's an unpopular thing to do, but before you change a strategy that you've already gone through in some way and from which you've already absorbed a lot of experience. So definitely learning a new strategy or switching to a new strategy means having to break new ground. It's like throwing away something you've already worked through, where you've actually already invested a lot of money, in my opinion. If it was on a live account, then it must have already cost you a lot of stop losses before you learn from it. And here you'll basically be doing the same work. And if you're that undisciplined, then you'll just keep changing like this all the time and you'll never be consistently profitable. So it's necessary. I'm not saying with this one specifically, but pick one and just stick to it systematically. That means, as I said, do a back test. Now you have much more experience than when you did your first back test. You can include a lot of things you've discovered along the way and try to incorporate those into your backtesting. Take these new experiences into account as well. I think that's beneficial. And it will show you whether this strategy is sound and whether it's good for your money management and your mindset. You've already done a lot of work, which means you have something to work with now, and you can evaluate the data much better than at the beginning when you first started with the strategy you're currently using. And last but not least, I recommend asking a community or your mentor where the real issue lies, because sometimes you just don't see your own mistakes. And again, it's your mind that's to blame for that. Sometimes your mind throws it in front of you. Sometimes you just overlook it, and you can keep overlooking the same mistake over and over. You keep making the same mistake automatically, somewhere systematically, and you don't even know you're doing it. And sometimes you kind of suspect, that you're making it. So don't lie to yourself. Approach it responsibly as if it matters, You have to be honest with yourself and say, no, this is simply a mistake. I must not do this. I know about this mistake, and try to work on it gradually. Nothing happens instantly. You have to start eliminating it from your standard trading routine. That means try to write down the mistake, define it for yourself, and simply try to avoid it. I know it's not exactly easy, but it can be done. It works if you focus on it. You'll suddenly realize that you're no longer making that mistake. But it takes some time. So before you change your strategy, go through this again, even this video, if you want to take it point by point to see where the real issue might be, okay? Most of the time, the problem isn't really in the strategy itself. It's from the experiences we pick up along the way, and we keep trying to innovate and improve things, but that usually doesn't help when it comes to trading. So those are a few points on what to do. If your strategy isn't working, take a look at this.